Hey everyone, and welcome back to the channel. Today, we're diving deep into the fascinating and often intense world of hard-to-borrow stocks and potential short squeezes. Our focus for this session is a very specific name that's caught our attention: Global Interactive Technologies Inc., trading under the ticker GITS. We'll break down why this particular stock is showing up on our high cost-to-borrow screener and what that could mean for traders. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's start with an overview of Global Interactive Technologies Inc., or GITS. This company operates in the communication services sector, specifically within internet content and information. Through its subsidiary, GITS runs Faning, a digital fan engagement platform designed to support online fan communities in South Korea. With a current market capitalization of about $7.3 million, GITS is firmly in microcap territory. Show chart GITS daily. Looking at the recent price action, GITS has seen some volatility. Today, the stock is down 7.83%, and over the last 5 days, it's down 8.26%. However, zooming out to the last 30 days, GITS is actually up a solid 32.45%. Highlight volume. Volume-wise, today saw only 34,722 shares traded, which is significantly lower than its 30-day average volume of 1,339,260 shares. This gives us a relative volume of 0x average, meaning today's price movement occurred on exceptionally low trading activity. Why is cost to borrow and why it matters? So, what exactly does hard to borrow mean, and why should you care? At its core, the cost to borrow, or CTB, is the annualized fee that short sellers must pay to borrow shares of a company. When you short a stock, you're essentially betting the price will go down. To do this, you borrow shares, sell them, and then hope to buy them back at a lower price later to return them, pocketing the difference. Explain CTB. The CTB fee is crucial because it's a direct indicator of demand from short sellers and, more importantly, the supply of shares available to short. A high CTB means it's expensive to hold a short position, either because many people want to short the stock or because there are very few shares left to borrow. And yes, these fees can easily exceed 100% annually, sometimes much more, because it's an annualized rate calculated daily, reflecting the intense scarcity or demand in the borrow market. Why this stock is hard to borrow right now? This brings us back to GITS. Our screener flagged Global Interactive Technologies Inc. for a truly eye-watering cost to borrow fee of 932.3% annualized. Highlight 932.3% CTB. That number alone tells us that it is extremely expensive for short sellers to maintain their positions in GITS right now. The estimated float for GITS is relatively small at just 2.4 million shares. A smaller float can exacerbate borrower scarcity, as fewer shares are available for trading and borrowing. While we don't have current data on CTB momentum or the exact number of shares currently available to borrow, that 932.3% figure is a powerful signal. Our internal composite squeeze score for GITS currently sits at 42.5 out of 100. This is a moderate score, suggesting some potential, but it's far from a definitive squeeze alert. It's important to remember that high cost to borrow does not guarantee a short squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. Squeeze mechanics explained. So, how does a short squeeze actually work? A short squeeze occurs when the price of a stock begins to rise significantly, forcing short sellers to buy back shares to limit their losses or avoid further borrow fees. This buying pressure from short covering, combined with fresh buying from new investors, creates a powerful upward spiral. Illustrate squeeze. Imagine short sellers paying that 932.3% CTB for GITS. If the price starts to move up, their losses accumulate rapidly, compounded by the high borrowing costs. At a certain point, many will be compelled to cover their positions buying back shares. This sudden influx of buy orders in a stock with a limited float, like GITS's 2.4 million shares, can send the price soaring, creating a snowball effect. Dilution risk check. One critical factor to consider with any potential short squeeze candidate is dilution risk. Dilution happens when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can flood the market, increasing supply and effectively offsetting or negating any buying pressure from a short squeeze, even if the cost to borrow is extremely high. New shares can provide short sellers with an easy source to cover their positions without driving up the price. Check GITS dilution. In the case of Global Interactive Technologies Inc., our checks found no recent diluted SEC filings such as -1s, -3s, or 424 BS in the last 90 days. Furthermore, we found no recent reverse splits for GITS in our look-back window. This is a positive sign for a short squeeze thesis, as there are no immediate red flags indicating new share issuance that could undermine a potential squeeze. Just a quick reminder before we move on. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For Global Interactive Technologies Inc. GITS, given its 932.3% cost to borrow and modest 2.4 million share float, here's what to keep an eye on. Look for continued high CTB rates, which indicate sustained pressure on short sellers. A decrease in the number of shares available to borrow would also be a strong signal further tightening the supply. Analyzed volume. We also want to see a significant increase in trading volume. Remember, today's volume was extremely low at 34,722 shares, a mere fraction of its 30-day average. A surge in volume, especially accompanied by positive price action, could signal renewed investor interest and a potential shift in momentum from its recent downward trend of 7.83% today. While a composite squeeze score of 42.5 is moderate, these other factors could change the landscape rapidly. Global Interactive Technologies Inc. GITS presents an interesting case study with its exceptionally high 932.3% cost to borrow and a relatively small float. While these factors point to potential short squeeze conditions, it's crucial to understand that they don't guarantee one. No recent dilution risk is a favorable sign for any potential upward movement. Always conduct your own thorough due diligence. Call to action. If you found this breakdown helpful, please hit that like button, subscribe for more in-depth stock analysis, and let us know your thoughts on GITS in the comments below. We love hearing from you.